Here are 3 pieces of news from the world of the crypto industry. U.S. Senator withdraws support for Elizabeth Warren's anti-crypto bill. Analyst explains the low interest in spot Ethereum ETFs. TonKeeper developers implement gasless USDT payments on Ton. First, news. U.S. Senator withdraws support for Elizabeth Warren's anti-crypto bill. U.S. Senator from the Republican Party, Roger Marshall, has withdrawn his support for the Digital Asset Anti-Money Laundering Act, DAMLA, a controversial anti-crypto bill he co-sponsored with Democratic Senator Elizabeth Warren in 2022. Marshall withdrew his support for the bill as a co-author on July 24, leaving 18 senators still supporting the bill, according to the official Congressional Legislative Tracker. Marshall and Warren jointly introduced the DAMLA bill in December 2022, with Senator Warren stating that cryptocurrency is used by rogue nations, oligarchs, drug lords, and human traffickers to launder billions in stolen funds. The bill aims to subject the crypto industry to existing anti-money laundering and counter-terrorism financing regulations. Specifically, the bill declares several crypto service providers as financial institutions, including decentralized wallet providers, validators, and miners, requiring them to comply with the provisions of the Bank Secrecy Act. Warren reintroduced the DAMLA bill to the U.S. Senate in July 2023. It aims to counter the illegal use of crypto assets for money laundering and terrorism financing. Several crypto organizations and individuals have criticized the proposed bill for overestimating the role of cryptocurrencies in financing terrorism and illegal activities and warned that it could undermine the U.S. crypto industry. On February 20, the American crypto advocacy group Chamber of Digital Commerce urged the Senate Banking Committee not to consider the DAMLA bill, stating it would destroy hundreds of billions of dollars of U.S. startup value and wipe out the savings of countless Americans who legally invested in cryptocurrency. On February 13, a group of 80 former U.S. military and national security officials wrote a letter warning lawmakers not to support the DAMLA bill. In the letter, officials warned that the bill would hinder law enforcement and exacerbate national security issues, forcing much of the digital asset industry overseas. Warren is running for re-election in 2024 to represent Massachusetts. On February 20, crypto advocate John Deaton announced that he would run as a Republican to try to unseat Warren. Second, news. Analyst explains the low interest in spot Ethereum ETFs. Before the launch of new Ethereum-based exchange-traded funds, there was great enthusiasm in the market. However, analysts predict that the instrument will have minimal impact on the short-term dynamics of ETH prices. After the launch of spot Ethereum ETFs, the price of ETH and investor interest in the cryptocurrency have significantly declined. Since the launch of spot ETH ETFs earlier this week, Ethereum's price has dropped by 8%. According to CoinGecko, the second largest cryptocurrency by market capitalization is currently trading at $3,268. Net outflows from the new instrument, particularly from the Grayscale Ethereum Trust, indicate a broad lack of interest. According to SoSoValue, over the past 3 days, $178.68 million has been withdrawn from spot ETH ETFs. Since the start of trading, ETHE has lost more than $1.16 billion. The main reason for the capital outflow from the Grayscale fund is high fees, which are about 10 times higher than its competitors. Therefore, investors are actively withdrawing funds from the product and investing in Ethereum ETFs from other issuers. Why is the market responding so weakly to spot Ethereum ETFs? Initially, analysts expected spot ETH ETFs to replicate the success of a similar Bitcoin-based instrument. However, this time the market reaction has been weak. The situation around ETH is uncertain. Ethereum failed to scale L1, while Solana has quickly gained momentum. Scaling L2 does not benefit Ethereum: low ETH burn rate, fragmented liquidity, poor UX. Airdrop farming is also no longer attractive, low rewards. Even ETFs couldn't ignite FOMO for ETH, expressed his disappointment, the well-known DeFi sector analyst known as Ignaz on X. One of the main reasons for the indifference may be the lack of staking in Ethereum-based exchange-traded funds. ETH holders typically earn from 3% to 5% per annum through staking. ETF investors, deprived of this opportunity due to regulatory restrictions, are at a disadvantage. Staking income is an important factor influencing the attractiveness of Ethereum. The lack of such an option in spot ETH ETFs can deter investors seeking stable returns. In this case, it is more advantageous for them to invest directly in cryptocurrency or consider another exchange-traded fund offering higher returns. Moreover, Ethereum is less known to the general public than Bitcoin, which is often referred to as digital gold. The lack of information about how ETH works and its advantages reduces interest in spot ETFs based on this cryptocurrency. Ethereum is the largest public blockchain platform with a relatively complex mining mechanism. Its development depends on various factors within the ecosystem. It's important to note that as an investment object, ETH represents dynamic supply calculations, complicating intuitive understanding for ordinary investors, analysts at SoSoValue emphasized. The appearance of spot Ethereum ETFs is undoubtedly a significant event. However, experts from SoSoValue suggest that it will not have as strong and quick an impact on the market as it did with Bitcoin. Nevertheless, the instrument could play a crucial role in the broader acceptance of cryptocurrencies and their integration into mainstream financial markets. Being the largest blockchain platform in the industry, Ethereum could pave the way for exchange-traded funds based on altcoins. Third news. TonKeeper developers implement gasless USDT payments on Ton. The non-custodial cryptocurrency wallet TonKeeper for the Open Network blockchain has introduced a new feature: gasless transactions with the stablecoin Tether. Ton and TonKeeper developers have launched the new W5 wallet standard. To try it out, update the app to the latest version and click Settings and select W5 Wallet. Add the W5 wallet alongside the current wallet. The main advantage of the new crypto wallet is gasless transactions. TonKeeper users will no longer need to hold TonCoin on their balance to pay for network fees for USDT transfers. Transactions are paid for in USDT or Notcoin. What's the point? Usually, to carry out a transaction on the blockchain, you need additional tokens to pay the fee. The new TonKeeper feature eliminates this requirement. Transaction fees will be automatically deducted from the sender's account. According to developers, gasless payments can accelerate blockchain adoption in everyday financial activities and lower the entry barrier for new users. Gasless technology can empower people. Imagine how annoyed regular users are when they have to pay extra fees for transfers. It's just too complicated, said Oleg Andreev, CEO of TonKeeper. Key features and benefits of the new feature, as highlighted by the TonKeeper team, include convenience. Users don't need to think about additional fees. They simply send USDT, and the fee is automatically deducted from the sent amount. Speed. Transactions are almost instantaneous. Scalability. The Ton ecosystem can process millions of transactions per second, allowing support for a vast number of users. The gasless USDT payment service is available in beta for the desktop version of the wallet TonKeeper Pro and mobile devices. The latest TonKeeper feature is part of the W5 standard, which the crypto wallet developers introduced earlier this month. It allows for gasless transactions and includes several additional benefits. Account delegation and recovery. Payment of subscriptions using TonCoin. Cheap multi-transfers. The main goal of W5 is to reduce user fees by 25% and open new opportunities for the Ton ecosystem that will improve the user experience for millions of people. In the recent update, TonKeeper also introduced a feature called TonKeeper Battery. It allows the use of stablecoins and non-fungible tokens to cover transaction fees instead of the cryptocurrency being transferred by the user.